Good evening, everyone. Time for another silver update. This is the 4-hour chart of silver provided by netdania.com. You can click on the link below. Now, what I've outlined here is a potential bottom based upon the anomaly that I selected here back when this MACD diverged from the price. That was one thing that I thought was a sign that that could be a bottom. It did turn out to be some sort of bottom. Now we're actually getting a similar sort of thing with the current price action and the MACD. You can see that we've got this point lines up with the low in the MACD, and this point here actually is a much lower price but is higher on the MACD. Nothing of the slope that this one was, but again, it's a positive slope and we're going towards the zero line. So it is possible that we're putting in a short-term bottom here, or we could roll over and go down if the financials keep going down. Apple is clearly falling, Google is clearly falling, and the stock market seems to be putting in some kind of top. Oftentimes silver and stocks trade together. There isn't any real reason for that except for the fact that it's alleged that people are raising cash, and so they're selling their paper silver futures contracts. I have quite a bit of doubt about the legitimacy of that explanation. But let's pull out to the weekly chart because we're going to get to the main topic of the night, which is Wynter Benton and the Screwtape files. Now, the Screwtape files are going to allege that silver is a bubble and that it's crashed. First of all, you can't say from this chart that silver is a bubble and has crashed unless you have to say that it's actually happened 3 previous times already. The drop from around $21 to $8.50 percentage-wise was actually a much larger drop than the one that we have here. Now, this run-up that we had from QE2 all the way up to nearly $50, that was a dramatic rise, and a lot of people were expecting that drop. We're going to get into some conjecture about what actually went into that rise and subsequent drop when we get to the main topic. But before we do that, let's go over to the questions of the night. And the first one here is from Ken M. And this is about advertisements. And he asks, "Dear Brother John, I'm an avid reader of your blog and visit it several times a day to get updated information that is difficult to find elsewhere. I have been a little concerned lately about some of the advertising and I've seen on your blog lately. I know you claim to be a Christian, which I do not doubt, but as Christians we need to take a stand on what we should allow on our web pages. Honestly, I have no idea how any of this advertising works, but where is the line drawn, brother? Matthew 6:24, no man can serve 2 masters, for he will either hate the one and love the other, or else he will be loyal to the one and despise the other. You cannot serve God and mammon." Not sure what translation that is. I don't think it's the King James. But anyway, these ads that you see are AdSense ads, and they're usually based on your cookies. Now, there was a rogue ad, a singles ad. I've already blocked all singles ads on the channel and other objectionable content, but ads slipped through. Remember that these are based on your cookies, so what you've been viewing determines what ads they present to you. That's a type of ad format that we have out on the internet. Now, there is one rogue singles ad that I've seen pop up. I've gone in and blocked the domain, and if you see any ads that are objectionable, go ahead and just send me the URL and I'll try to manually block those. I've pretty much gone and blocked all the ones that are in those categories, but it can be difficult sometimes to get them all, and some slip through. So hopefully that addresses that. Now, there is a little bit of difference between doing something where you're making a living, and I believe in the advertising model. I think that it's a good value for people because people get content paid for, and all they have to do is view the ads, or if they're interested, go to the sponsors. And since with the cookies, they can actually present ads that you may be interested in, it's much more relevant to people. So I don't have any problem with that model. There are costs associated with running a blog and running YouTube channels and things like that, and the ads go for paying for that. So let's go to the next question, and that is from Phoenix 1967. Concept of a stronger dollar lowering silver values. Hi, Brother John. I've just subscribed after seeing many of your very insightful and informative YouTube videos. Thanks for all you do. A question occurred to me regarding gold and silver values. I've noticed that when currencies of other countries get weaker, it's often likely to comparatively make the US dollar get stronger. This tends to push down the values of gold and silver. Taking this to the extreme, for example, if the euro falls and other currencies fall and it keeps strengthening the dollar in the process, shouldn't gold and silver values continue to fall as the conceptual value of the dollar rises internationally? Shouldn't this convince one to wait before making large stack purchases of gold and silver? Or am I missing something about how the metals are going to play out in the end game of the US dollar? I'm going to continue keep stacking anyway, but I definitely would like to know your thoughts on this. Well, first of all, the dollar is the dollar basket, which is heavily weighted towards the euro, the Japanese yen, and the British pound. It's not at all weighted towards the BRIC currencies, and I don't believe that the Chinese currency is even a part of it. So, first of all, that dollar index isn't really a very accurate depiction of the dollar's true value. Of course, the price of gold and silver are a much more accurate depiction of that value. Now, it's true that the price of gold and silver go down sometimes when the dollar strengthens, although there have been many times when the dollar has been strengthening and gold and silver have gone up as well. So that's not a universal rule. But you have to remember that a large number of things are priced in dollars. The petrodollar, of course, being the primary one, but also many of the soft commodities, and gold and silver being primarily traded in London, in Chicago, and some in Japan. They're pretty much going to be Western oriented, and the pricing is affected by what happens in the West. I think that's going to go away in the future as we become much more of an internationalized market, but currently the gold and silver markets are very US, Euro, and British dominated markets, and so that's why you see that effect. And the last question, 500 ounces. This is from Wayner. 500 ounces. Yes, please clarify, Brother John F. I too would appreciate it if you could clarify the statement from last evening's video that with 500 ounces in silver you should be pretty much set. To me, this indicates that you believe that silver will be going much, much higher. I've read statements which say that precious metals should be viewed as a source of preserving your wealth, and I've also seen quite a few statements which indicate that silver will really skyrocket in price and actually be able to buy more than it currently does, even though other prices will rise as inflation kicks in. If you can provide clarification, additional info on the 500 ounce mark, I would sincerely appreciate it, Brother John. I respect your views and insights. Thank you for all you do. The reason I made the comment about 500 ounces is that I think if you thought about having 500 ounces of gold, then you would agree you'd probably be pretty much set with that. Would be worth roughly $750,000 to $1 million or something like that. I don't have any reason to doubt. I firmly believe that silver is going to go to parity with gold and probably even beyond. So that being the case, yes, for the average person, if they can manage to stack 500 ounces of silver, I think that they are at least set in terms of having the amount of metal that's necessary to weather the coming storm, whether that be a hyperinflationary blowout or a deflationary collapse. Remember, I've pointed out many times that I am not one of those doom and gloomers who believes absolutely that the scenario we're going into is sort of back to the Stone Age scenario, and that's what you always get criticisms based on when people say, well, your silver's not going to do you any good, no one's going to want your silver for food, etc., etc. Well, that's not the scenario that silver needs to rise in price. All that silver needs to rise in price is enough people buying the physical metal, and the continued industrialization and improvement of the lifestyles of the roughly 2 billion people in the Asian, Chinese, and Indian economies. That's enough to catapult the price of silver without the U.S. even being involved in it. That's just the raw numbers. But we're going to get to a lot of those numbers when we look at the Screwtape files and Wynter Benton. So let's start off with Wynter Benton. This is a story that I haven't covered because Wynter Benton was a big story for a while. It's just one of those rumors and things that I don't pay a lot of attention to. But let's read a little bit of the Screwtape files, analysis of Wynter Benton myth, and then we're going to look at the Screwtape files themselves. Wynter Benton, aka Amber Reeves of Virginia, was the name of an online alias who appeared during 2011 on the Yahoo Finance message boards, promoting many popular silver misinformation memes. Wynter appeared in 2 primary rounds, with the end of each appearance distinguished by huge waterfall slides in the price of silver. Despite having some lucky price calls, Wynter promised many things in the silver market with specific time frames which did not come to pass, resulting in destroyed credibility. Similar to many other market commentators, Wynter purported to have insider information which at first gained much interest, and the claims were bold enough to command attention. In our opinion, the Benton claims are complete rubbish, and for our own part, we wish we had never wasted so much time looking into it. We hope this permanent record page will help others avoid the same mistake. And it goes on. This is a very long article documenting many, many links and a lot of things about the Wynter Benton story. Kind of interesting about that is this disclaimer by the Screwtape files. Wynter Benton article archive. By late 2011, we'd figured out their true colors. We published much material as we could to help undo the damage of our own Wynter Benton promotion and provide a reference point for any new kids on the block. So this idea that there was this group, the Wynter Benton group, supposedly this group was going to take it to JP Morgan by demanding delivery of physical silver and explode the price of silver on the futures markets and cause the JP Morgan short to bankrupt JP Morgan. Now, recently it's been reported that the MF Global scandal was actually, at least the latest information from Wynter Benton has alleged, that the MF Global was an attempt to prevent them from taking delivery, and that's what caused the last prediction to fail to come to pass. Now, I don't know what the truth is of any of this, but I can say that we have a lot of shady characters involved in a lot of this stuff, and the first question you would want to ask yourself is why? Why do we have all these shady characters involved in silver and all of these machinations? So let's look at the latest Screwtape Files article about the silver bubble, and this was released by Joan of Arc on October 24th, and this is an article that a lot of people have asked me to address, so I'm going to address it here. And Joan of Arc, and you can see here about Screwtape, there's Slow Loris Larry, Joan of Arc, Warren James, Lewis Cipher. You can see these are obvious aliases, and we can look at the Screwtape files, and about themselves they say they're 5 prosimians, and you tell me what that means. We have backgrounds in investing, precious metals, science, IT, academia, diplomacy, journalism, detectiving, think tanks, and James Bondiness, really. So, who are these guys? Kind of makes you wonder. Now, if you're not familiar with Screwtape, Screwtape is a character in C.S. Lewis's The Screwtape Letters, and he's a fictional devil in the book who is tutoring another devil in how to defeat the faith of the particular character in that book. Now, the most famous point and discourse out of that book by C.S. Lewis is the idea that Screwtape wants to convince the world, the modern world, that the devil doesn't exist and God doesn't exist, and then find a way to reintroduce that concept in a different way. So that's the idea behind Screwtape and the Screwtape letters. Now we have the Screwtape files. So that's a little bit strange there, why they call themselves Screwtape. Are they trying to convince somebody that something that exists doesn't exist, or something like that? You'll have to decide for yourself. But let's look into this article about the silver bubble by Joan of Arc. Do you remember February, May 2011? I do. I'd previously confined my trading to stocks, oil and resources mostly, but I wanted to branch out and thought the gold and silver charts looked good for a solid bounce back. My thesis for gold was pretty clear: a nice solid investment to hedge the rest of my portfolio against inflation, and I figured I'd take a slight gamble with silver, as I imagined it would provide me with a volatile version of gold. So at the beginning of February 2011, I went in 75% gold and 25% silver. Now, so that's going to be at this point here, right before this massive rise and alleged Wynter Benton manipulation. Boy, did us newbie silver investors get lucky. The charts had pointed to a good rise in silver, but we hadn't imagined such a move in our wildest dreams. By the end of the month, it had gone from $26 to $34, and I was scaling out of gold and into silver. With this metal swap, the profits just kept rising. By the end of April, it had all gone stupid, and it was obvious to anyone with two neurons to rub together that we were in the grip of a mania. I got out at around $45 and never regretted the decision. A few days later, silver started its plunge from $50 to eventually $26 and has barely recovered to this day, currently at $31 and change. What I did regret, however, was what happened to everyone who had not ejected. It could easily have been me too, had I had a bit less trading experience and a bit less fear. So it seems pretty obvious here that this person was not involved in physical silver. I was involved in physical silver from the drop from 21 to 850. That was a much more harrowing drop than the drop from $50 to 26 or so. So this apparently was a person trading the futures or trading the ETFs or trading some kind of paper silver vehicle. And we'll continue. Had I had a bit less trading experience and a bit less fear, yes, sharp moves higher always scare the absolute out of me, more so than the plunges, in fact. And this burned my curiosity. What had actually taken place? How had such a mania developed, and why didn't most silver retail investors get out? They were still buying all the way up to $49. So I started to look more deeply into the 2011 silver bubble and events since, and was rather shocked by what I found. Now, I want to point you to my Office series about this. It's the second one I did. It's called The Silver Bubble Debunked, and it's got about 26,000 views, which is pretty high for the Office series. That's one of the highest. But in that video, I encourage you to watch it. I covered the definition of a bubble and what constitutes a bubble. Now, there are 6 things that I covered. For something to be a bubble, it has to be a popular mania. Clearly, silver was not. It uses excessive debt. Now, except for the paper price, and I don't even know if that was debt, certainly physical silver, there's no debt involved there. It's based on the greater fool theory, the idea that the only reason you're buying is so that you can sell to someone else at a higher price. High volumes at variance with intrinsic values. I think we've covered the intrinsic values. That it results in a misallocation of resources. Now, again, that's the opposite with silver. Silver is mined as a byproduct because the price is so low. And then people spend more because they feel richer. There weren't any silver millionaires running around. So silver was not a bubble, and you can see by the chart that silver was not a bubble. At this point in the chart, if we would have had a continuation down like this and a failure all the way back down to here, then you could fairly say that silver was a bubble. But that's not what we had, and that's not what we have. So silver is at $32. The low was around 4. That's roughly an 8-fold gain. That's standing steady at an 8-fold gain. So by the price and also by the fundamentals and the other reasons, silver isn't and was not a bubble. But let's go on. The first bit that didn't shock me, essentially the 2011 silver bubble was just another pump and dump. Like so many others that have been seen over the years, I was certainly no stranger to them. One finds them in the oil juniors all the time. Now, a pump and dump scheme, for those of you who aren't familiar with it, is where a person promotes a particular stock, and many of these have been prosecuted by the SEC, on a stock board or the Yahoo message boards. A lot of times it's just some kid in his mom's basement, and they find a penny stock, and they buy a lot of that stock, and then they start sending out promos through spam or through the message boards to try to get people to buy that stock. And as they can get interest garnered and a lot of people buying it, the price rises, and of course a rising price attracts attention. More people buy it, and while the price is rising and nearly peaks, they're unloading all the shares that they bought at a very, very low price, and they make a tremendous profit. They dump all of their shares on the public, and then the scheme is over and the stock collapses all the way back to the price where it started. So as I showed you with the price of silver, it hasn't collapsed back to the price where it started, not even close. But second of all, it's not a pump and dump because there are some people who are selling it. I think Silver Doctors now is selling silver, and Chris Dwayne is selling silver. I don't believe they were at that time, but I don't see any problem with that. That's just encouraging more people to stack physical silver. So it wasn't a pump and dump in that sense because the people who were selling silver really weren't involved in it. Now they have a term they use here called the silver logosphere, and they talk about how this silver logosphere is, I guess I'm a part of that, and the purpose is to promote or pump silver to get as many people interested in buying silver as possible so they can, I guess, unload and make money. I don't really know. You can see they're talking about silver being a cult. So, and I don't have time to go all through all of this. I encourage you to read all of these articles. But whoever these people are in this Screwtape files, they seem to be very, very interested in silver, and even though the silver bubble has supposedly collapsed, they're still interested in bashing silver. That's the only way I can describe it. And people who promote buying of silver. By the way, this blog started, I looked for the earliest article, it started in May 2011. So there's a lot of shady things about the people behind this blog and why they're doing what they're doing. I'll leave it to you to draw your own conclusions. They say here, who benefited? This is tricky to answer without getting sued. Many of the fanzine sites were relatively innocent, useful idiots. Wynter Benton was a silver fan kid in the basement who ingested too much of the online hype and got too turned on by the attention he was able to garner, and even now doesn't seem to be able to give it up. But the bears and some of the sites, such as King World News and the self-aggrandizing Max Kaiser were clearly promoting an agenda. Well, I think Max Kaiser was pretty obvious about the agenda he was promoting. He wanted to see people buy physical silver and bust J.P. Morgan, and that was what he wanted people to do. I don't think there was any kind of hidden agenda. I think he did sell a Max Kaiser coin at one point, but I can't imagine that that was the basis for that. We all know who the big silver investors are, and many of the links between them, the miners and the silver logosphere, are not even secret. TRA sponsors King World News. Sprott is an investor in gold money. So Sprott stores some gold and silver in gold money. I don't even know what the point of that is. He's a billionaire. He probably is an investor in hundreds of things and has all his own derivative products to flog. Casey, another gold money investor, is linked to numerous silveragosphere sites, sometimes via the egregious Tecoa de Silva. Turd laps up every word of Gonzalo Lira, and Santa Harvey had Sprott's ear throughout 2011. The NIA were pumping all over the place. I can't go into further specifics. So basically the contention here is that silver, the rise in price of silver, was a bubble created by hype, and it was the silver logosphere, and it's the bubble is popped. Silver will never go back to $50 anytime soon, and it's not even going to $40 for a long time. Now, if you remember, it's quite interesting that the September smackdown happened right when silver was about headed towards that $40 price, and then we got that second smackdown. You can see that is right here on the chart. So what does this all mean? What I think it means is that for some reason the powers that be have decided to bash silver and promote a lot of these mysterious sites, whether it's Wynter Benton or the Screwtape files, to, in my opinion, discourage silver investors, especially the physical stackers, because really the people with paper, that can just be taken away like MF Global. So they aren't real players, but the silver stackers are real players. Now, supposedly this period of time here, this rise, was the Wynter Benton rise, and that is throughout this time frame of early 2011 through May. And the idea is that by using however much money it was, I don't know how much money it was alleged to be, and taking delivery, that they could put a squeeze on the silver shorts. Well, whether this mythical Wynter Benton even exists, I have no idea. But it's quite obvious to anyone who does the math that anybody with billions of dollars, I've covered CalPERS, the CalPERS portfolio is roughly $200 billion. If CalPERS invested 10% of their portfolio and took delivery of physical silver, that would be $20 billion. That would crack the market right there. That would be nearly a year's worth of mine supply. That's just one pension fund. So any number of hedge funds, billionaires, pension funds, or other investors, or even, as I propose, small silver stackers, ultimately will be able to break this manipulation just by buying silver. As to whether or not Wynter Benton actually existed, I don't know. But it is quite possible that this rise, or at least parts of this rise in the paper price, was manipulation. Now, if you know, I've covered Jesse Livermore in the past. If you've read his book, you know that Jesse Livermore was a stock operator. One of the things he did was to unload stock for the insiders. And one of the techniques that Livermore used was locking up pools of stock and then buying it and selling it on the decline. So Livermore would actually manipulate the price up by buying, if he were manipulating silver in this case, by buying longs all the way through this period. By the time it reaches a very high price, he would be carrying a lot of extra longs. What that would do is that would give him leverage. That would give him a lot more leverage than if he had just come in as a short here. Then he would be putting on naked shorts. But if he was a leveraged long already, then he'd have the ability to flip his book violently and go all short and use the power of those leveraged longs the other direction by selling them and then adding shorts to that. So it is quite possible that this rise was partially due to that type of manipulation with the intent to create this rise and then crack it. Now, what does this mean for physical silver? It really doesn't mean that much, because as I've pointed out before, when we had this 2008 smackdown, I followed Silver Eagles all the way down to here. They never went below $16. There were a lot of coins that never ever got down to that $26 price. Most of the coins stayed above 30. So for all intents and purposes for the silver stackers, if we take out this brief spike here, we're looking at a high of roughly $44 or $45, and we're sitting at about 32. So that's not a bubble, and I expect another leg up in this market. I think the next leg up is going to be the most amazing leg that we see. And of course, there's going to be a lot of shady characters, Wynter Benton types and Screwtape, Joan of Arc types, hiding out, making comments, and trying to distract you from stacking physical silver. The best thing to do is just ignore them and keep stacking. And we'll talk to you next time.